Hello guys, today I am going to share life insurance guide to policies and companies. What is life insurance? Life insurance is a contract between an insurer and a policy owner. A life insurance policy, the insurer pays a sum of money to named beneficiaries when the insured dies in exchange for the premiums paid by the policyholder during their lifetime. Contract to be enforceable, the life insurance application must accurately disclose the insured parts and current health conditions and high risk activities. A key life insurance is legally binding contract that pay and death benefit to the policy owner when the insured dies. For a life insurance policy to remain in force, the policyholder must pay a single premium upfront or pay regular premiums over time. When the insured dies, the policy named beneficiaries will receive the policy's face value or death benefit. Term life insurance policies expire after a certain number of years. Permanent life insurance policies remain active until the insured dies, stop paying premiums, and should surrenders the policies. A life insurance policy is only as good as the financial strength of the company that issues it. State generality funds may pay claims if the issuer can't. Type of life insurance. Many different types of life insurance are available to meet all sorts of needs and reference depending on the short or long term need of the person to be insured. And the major choice of whether to select temporary or permanent life insurance of important to consider. Term life insurance. Term life insurance lasts a certain number of years. Then end, you choose the term when you take out the policy. Common terms are 10, 20 or 30 years. The best terms life insurance policies balance affordability with long-term financial strength. Decreasing term life insurance. Decreasing terms is a new renewable terms life insurance with coverage decreasing over the life of the policy at predetermined rate. Convertible term life insurance. Convertible term life insurance allows policy holders to convert a term policy to permanent insurance. Permanent insurance. Renewable term life insurance is a really yearly renewable terms life policy that provides a quota for the year the policy is purchased. Premiums increase annually and is usually the last expensive term insurance in the beginning. Permanent life insurance. Permanent life insurance stays in force for the insured entire life unless the policyholder stops paying the premiums or surrenders the policy. It's typically more expensive than terms. Whole life Whole life insurance is a type of permanent life insurance that accumulated cash value. Cash value life insurance allows the policyholders to use the cash value for many purposes, such as a source of loans or cash or to pay policy premiums. Universal life, a type of permanent life insurance with a cash value component that earns interest. Universal life features flexible premiums. Unlike term and whole life, the premiums can be adjusted over time and can be designed with a level death benefit or an increasing death benefit. Indexed universal. This is a type of universal life insurance that lets the policyholder earn fixed or equity indexed rate of return on the cash value component. Variable universal. With variable universal life insurance, the policyholder is allowed to invest the policy's cash value in a available separate account. It also has flexible premiums and can be designed with a level death benefit or an increasing death benefit. Term-based permanent life insurance. Term life insurance is different from permanent life insurance in several ways, but tend to best meet the needs of most people. Term life insurance only lasts for a set period of time and pose a death benefit should the policyholder die before the term has expired. Permanent life insurance stays in effect as long as the policyholder pays the premiums. Another key difference involves premiums. Term life is generally much less expensive compared to permanent life because it does not involve building a cash value. Before you apply for life insurance, you should analyze your financial situation and determine how much money would be required to maintain your beneficiaries' standard of living or meet the need for which you're purchasing a policy. For example, if you are the primary character and have children who are 2 and 4 years old, you should want enough insurance to cover your custodial responsibilities until to hire a nanny and a housekeeper or to use commercial child care and a cleaning service. Then perhaps add some money for education, include any outstanding mortgage and retirement needs for your spouse in your life insurance calculation, especially if the spouse earns significantly less or is a stay-at-home parent. Add up what this cost would be over the next 16 or so years at more for inflation, and that's the death benefit you might want to buy. If you can afford it, how much life insurance to buy? Many factors can affect the cost of life insurance premiums. Certain things may be beyond your control, but other certain criteria can be managed to potentially bring down the cost before applying. After being approved for an insurance policy, if your health has improved and you have made positive lifestyle changes, you can request to be considered for change in risk class. Even if it is found that your proper health, then at the unital underwriting will not go up. If you're found to be in better health, then you can expect your premiums to decrease. Step 1. Determine how much you need. Think about what expenses would need to be covered in the event of your death. Things like mortgage, college tuition, and other debits, not to mention funeral expenses. Plaques. Income replacement is a major factor. If your spouse or loved ones need cash flow and are not able to provide it on their own, there are helpful tools online to calculate the lump sum that can satisfy any potential expenses that would need to be covered. What affects your life insurance premiums and cost? Step 2. Prepare your application. Age. This is the most important factor because life expectancy is the biggest determinant of risk for the insurance company. Gender. Because women statistically live longer, they generally pay lower rates than a male of same age. Smoking. A person who smokes is at risk for many health issues that could shorten life and increase risk-based premiums. Health. Medical exams for most policies include screening for health conditions like heart disease, and cancer, and related medical metrics that can indicate risk. Lifestyle. Dangerous lifestyles can make premiums much more expensive. Family medical history. If you have evidence of major disease in your immediate family, your risk of developing certain conditions is much higher. Driving record. A history of moving violations or drunk driving can dramatically increase the cost of insurance premiums. Life insurance buying guide. Life insurance applications generally require personal and family medical history along with beneficiary information. You will also likely need to submit to a medical exam and will need to disclose any pre-existing medical conditions, history of moving violators or duels, as well as any dangerous hobbies such as auto racing or skydiving. Step 3. Compare policy quotas. When you have assembled all of your necessary information, you can gather multiple life insurance quotas from different providers based on your research. Prices can differ markedly from company to company. So it's important to go to the effort to find the best combination of policy, company rating, and premiums cost, because life insurance is something you will likely plan pay on a monthly basis for decades. It can save an enormous amount of money to find the best policy to fit your needs. Benefits of life insurance. There are many benefits to having life insurance. Below are some of the most important features and protections offered by life insurance policies. Most people use life insurance to provide money to beneficiaries who would suffer a financial hardship upon the insured death. However, for wealthy the tax advantages of life insurance, including the tax deferred growth of cash value, tax-free dividend, and tax-free death benefits, can provide additional strategic opportunities. Who needs life insurance? Life insurance provides financial support to surviving dependents or other beneficiaries after the death of an insured policyholder. Here are some examples of people who may need life insurance. Parents with minor children. If a parent dies, the loss of their income or caregiving skills could create a financial hardship. Life insurance can make sure the clients will have the financial resources they need until they can support themselves. Parents with special needs and adult children. For children who require lifelong care and will never be self-sufficient, life insurance can make sure their needs will be met after their parents pass away. The death benefit can be used to find special needs trust that a fiduciary will manage for the adult children benefit. Thank you so much.